The Timber Tax webinar. I'm Dr. Linda Wan, the National Timber Tax Specialist from USDA. That's U.S. Department of Agriculture Forest Service, and I work in the Washington, D.C. headquarters. Bob has been a great partner over the years to lead and manage the forestry webinars, which are very helpful to our forestry community. As usual, I'm here to help you file your 2018 federal income tax return when it comes to timber transactions, which will be due in about 2 weeks. Our timber owners, foresters, loggers, and forest product companies, as well as their tax preparers and advisors, are in great need of tax information to help them manage their timber financially, especially in light of the most significant tax law changes taking effect for the first time in 2018 taxable year. So there have been tons of confusions about the changes, making this tax season a very busy one. And some changes are surprises, as you will discover as we go along with our presentation. And I will answer your questions in the end. And today's webinar, of course, is educational. It's not legal or accounting advice. And I will discuss these very important tax issues. First, how to treat timber sale income on your tax return and what forms to use to file. And second, what deductions are available to timber owners. And what are the new tax law changes that started in 2018? And then next is Form T. Yes, Form T is a tax form, but it is specifically designed or used for timber transactions, yet few tax practitioners know, let alone filling it out, filling it out. So we're going to go over that form, and then I will cover the timber loss deduction rules when you're in an unfortunate situation where your timber was damaged by, say, the hurricanes. And another important deduction is the cost of tree planting. And this is a very special tax incentive for timber owners investing back into your property by reforesting the property after your timber harvest. So I will provide useful tax tips and, of course, cover the latest tax law changes. This is a very important slide here. If your main purpose of owning your woodland is for personal enjoyment and not for generating profit from growing timber, your timber property is classified for tax purposes as personal property. So example personal enjoyment could be fishing, hunting, family retreat. And one of the main disadvantages of personal property classification is that in general, your tax deductions are limited. Now, if your main purpose of owning your woodland is for generating profit from growing timber, then your woodland is classified as investment property, which enjoys more favorable tax treatment than personal property. But due to this year's tax law change, the change is a surprise, and the deductions are limited. I will go over in detail in a little bit later. And the third category is business property. If your main purpose of owning your woodland is for generating profit, the same as the investment, and your activity is more frequent and regular than an investment, you may be classified as timber business for tax purpose. The main advantage of business classification is you get to take deductions fully if you meet the requirement. So profit motives are important for tax deductions, And that depends on factors such as whether the time and effort you put into your activity indicate an intention to make a profit, whether you depend on income from the activity. Not many people are able to do that, but whether you and change your operation or change your advisor, for this case, our consulting forester, who has the knowledge needed to carry on the activity as a profitable business, etc. So there's not a clear-cut rule to distinguish between investment property or business property by the tax rules. It depends on the circumstances and your situation. But one thing I want to emphasize is that profit does include asset appreciation. And the asset appreciation is particularly applicable to timber as timber grow over time and become more and more valuable. And that is asset appreciation. And that means that you have for-profit motive. One of the best way to document this is to have a forest management plan that says, I own timberland to generate profit from growing timber. If you have an objective defined in your forest management plan like that, and that is one of the proof that you have for-profit motive. Okay, so we talk about different ownership because the tax treatment on timber sale or deduction of the deductions are very different for different ownerships. And one of the most frequently asked questions is on timber sale. How do I report timber sale income? Now, let's look at, there are different kinds of income, the types of income. One is ordinary income, your wage, your salary, and the other one is called long-term capital gains. Long-term means you own your property more than 1 year before you sell the property. And so for ordinary income, they are subject to a 10% and 7 bracket after new law change, and the maximum tax rate is 37%. So as you can see that for ordinary income tax, the tax rate can be higher than the long-term capital gains, because the long-term capital gain maximum tax rate could be 0% or maximum at 15 or 20%. The way that the long-term capital gain tax works, for example, for the 0% tax rate, if you're married filing joint returns, your taxable income, so we're talking about taxable income here. Taxable income is after your deductions, you take standard itemized deductions, so it is kind of your net income. If your taxable income is less than 77,200 for 2018, so it's a little less than $78,000, your married filing joint return, the long-term capital gain portion of that income is taxed at 0%. So for example, your taxable income is $50,000, married filing joint return. And out of the $50,000, you have a $10,000 long-term capital gain. The $10,000 long-term capital gain are taxed at 0%. In other words, you're not paying any taxes on that 10 grand. And that is very important to know, that long-term capital gain enjoys a favorable tax treatment here. And there are some other benefits other than the rate, preferential rate difference. For example, if you're retired, capital gains does not count as income that reduce your Social Security payment before you can earn so much money. So long-term capital gain are a very good thing. Alrighty, so now let's talk about how do we report timber sales. Well, the first one is sale of standing timber as investment. And it's the same rule for personal property. We talk about personal property. As far as timber sale, if you have a sale of timber on your personal property, it's treated the same way as the investment property here, which is sale of standing timber held as investment or personal property is a capital gain. So very good news there. What you do, you file Form 1040, Schedule D, and you start with Form 8949, and the summary total is transferred to Schedule D. That's good news. What about business classification? Well, it's also good news here too. Sale of standing timber held in a business is a capital gain if it's held for more than 1 year. So this is also very good. The difference is that you, at this point, report on tax form 4797, and then it will transfer number to Schedule D as capital gain. Now for tax people here, sale of standing timber held in business is section 1231 gain, and that's why it's report on form 4797. And the tax code section for this position here is called section 631B. We gonna go over section 631A, which is the next slide. It also concerns about business timber. However, the sale method is different than the standing timber sale. In this case, it's a sale of felled timber. So as soon as you cut the timber and the timber owner are involved in anything after the timber is cut, transporting or getting the sale from the mill and direct the payment to the logger, then this kind of transactions are subject to a totally different set of rules. Now, for most small woodland owners, most of them are doing either a lump sum or a pay-as-cut standing timber sale. But some landowners, for example, if you're in a logging business, you have logging equipment, you're also a landowner, you cut your own timber, then this rule applies. So all gains are ordinary income in this kind of transaction unless a section 631A election is made. When you make that election, the good news is that the appreciation of standing timber is still treated as capital gain, and any income that you derive from felled timber, transporting it, and that are ordinary income. And this is covered by tax code section 631A. And we don't have enough time to cover an example in detail, but I will point out to you the additional information and resources you can use if you want to understand. Okay. In the sale of felled business timber, the section 631A, that special election, you make that election by checking the yes box on Form T. And so if you're covered in this kind of transaction and forgot to check the yes box on Form T, then all gains are ordinary income. So it's very important to make this election. And then your sale is reported on 4797. This is the capital gain portion, and your form and the ordinary income portion is reported on Form 1040 Schedule C. Alrighty. So what kind of deduction can we take when we report timber sale? One of the potential very important one is called depletion deduction. Depletion, this word, is basically just a deduction from the timber sale income. And it is calculated based on the timber basis. So we will need to see what timber basis is. Well, it defined differently depending on how you acquired your timber property. So for purchased property, your timber basis is just the cost you paid for the property. And I'm going to show you an example how to allocate the basis. But there's a special rule for inherited property. Your timber basis is defined as the fair market value of the timber on the date of the decedent's death. The fair market value of the timber on the date of the decedent's death. So if you inherited the timber many years ago, you will need to go back many years to give an estimate of the fair market value of the timber on the date of the decedent's death. All right, let's look at an example, how to set up your timber basis. This is a hypothetical example, assuming you bought 40 acres of timberland for $48,000. And you also paid $1,900 fee for your consulting forester. And the question, what's your timber basis? Okay. Well, it turns out we need a ratio in this red one here. We need additional set of data, which is fair market value of each of the assets that you acquired by purchase. In this case, the appraiser telling you that your land is worth about $15,000 and the salt timber on the property is worth about $19,000 and the pulpwood is $10,000. So the fair market value of the land and timber altogether is $44,000. And the way to derive the ratio 34% here is dividing $15,000 by $44,000, and that gives you 34%. So in your purchase, about 34% of what you paid for is on land. If you divide $19,000 by $44,000, that gives you 43%, and similarly for pulpwood. Once we know the ratio here, then we can allocate the basis to the land and timber. How do we do that? Well, $49,900. This is the total cost. Now, how do we derive this $49,900? And let's go back to our assumption here. You bought 40 acres for $48,000, and that's not your total cost. You also paid $1,900, and so when you add 48,000 plus 1,900, and that gives you the total cost of 49,900. That number times the ratio of 43% for your salt timber, finally $21,557 is the basis for salt timber. And so similarly for pulpwood, it's this number, and for land is 34%. So the land is $16,966. And this is a example of how to correctly set up timber and land basis. Okay, now I do have a quiz for you. If I inherited the timber property 10 years ago, does this mean I have to go back 10 years to estimate the fair market value of my timber and then to set up my timber basis? And you can go ahead and make your selection by select yes or no. Mhm. Thank you so much. Yes, 89% says yes. Remember, yes, that's the correct answer, is that remember, by the tax law definition, the basis for inherited property is the fair market value on the date of the decedent death. So when you inherit the timber property 10 years ago, and you're going to need to go back 10 years at that time to estimate the fair market value. It's acceptable by the Internal Revenue Service to for you to set up timber basis retroactively. Most time you will need to work with the consulting forester to give you a professional estimate, the best they can, to set up the fair market value back then. And the other thing is you could look for the estate appraisal record and to give you some clue, to give you some number to start with. Or you can go back 10 years for the county tax assessor's office. A lot of time their valuation may be low, but that's somewhere you can start to give the property a fair market value estimation. But just to know that even if you haven't set up the timber basis, the reason we talk, because timber basis is huge. It represents potential depletion deduction from timber sale. It also limit to, as we will see, the deduction for a number of deductions. It's going to be based on timber basis. If you haven't set it up, you can start to work on this, and it's acceptable to set up your basis retroactively. Since we know how to set up our basis, how do we recover basis through depletion? Well, I'm going to give you this formula. Just bear with me, it's not very complicated actually. So we set up our timber basis already, right? And so we have saw timber and pulpwood basis. And we also need to know the volume of the timber. So maybe you have a saw timber of 1,000 board feet, and the timber basis here, meaning the dollar amount. And so you divide the timber basis by the total volume on your land. That gives you a unit. It's called the depletion unit. That dollar unit times the amount of timber that you sold gave you the depletion deduction. So this is the concept for depletion deduction. And let me ask you a question. Another quiz here. If you sold a portion of your timber, the basis for the entire property can be deducted from the income. Is this true or false? Say if you sold a third of your timber, the basis for the entire property can be deducted from the timber sale income. All right, 90% of the participants are saying right. This is not correct. And as we have talked about the depletion deduction, let me go back to, for example, here. Now, when you set up your timber basis for your entire property and dividing that by the timber volume, it gives you a depletion unit. Now, if you only sold a third of the timber, now here times a third of the timber give you the actual depletion deduction. Of course, if sold all the timber here, then you can take the timber basis for the entire property against the timber sale. Otherwise, this formula tells you that it's a proportional to timber sale in terms of figuring out the depletion deduction. Okay. Reporting timber sale has a potential other tax here, and that's the 3.8 net investment income tax. So this tax is only applicable to certain high income taxpayer, and it is in addition to the long-term capital gain that we just talked about. So here is how this 3.8% tax works. The tax is imposed on the lesser of net investment income for the year. We'll define what the net investment income. I'll show you an example. Or the excess of modified adjusted gross income over this threshold is fixed by the tax law. So for single taxpayer is 200,000, married filing joint 250,000. So the tax is imposed on the lesser of these two numbers. The second number is the excess of your income over the threshold. The lesser one is subject to a 3.8% tax. Let me show you a hypothetical case here. Husband and wife had $270,000 adjusted gross income, AGI, including $50,000 investment timber capital gains. So they made other income $220,000, but they have a $50,000 timber sale, which is capital gains, and they are investment income. How do you report in this kind of a scenario? Well, you're going to report $50,000 as long-term capital gain. On top of that, you're gonna also figure out the 3.8% additional tax here. So the lesser of the two numbers is calculated the excess of your income over the threshold. 250 for married filing joint is $20,000. The lesser of 20,000 and 50,000 is 20,000 times 3.8%. So that means you're paying an additional of $760,000. $760. So this is the new tax law change started in the year of 2013. This applies to timber as its investment income. Okay. Here's another quiz here. If your adjusted gross income is less than $200,000, your capital gains are not subject to the 3.8% net investment income tax. Is this statement true or false? Your adjusted gross income is less than $200,000, then you're not subject to this 3.8% tax. All right, yes, it's true, because this tax is having that excess threshold. So for example, if you make $150,000 and there's zero excess amount over $200,000, so the less of the investment income or the excess amount is zero, so yes, then we're not subject to this investment income tax. Before I go over the expenses and deductions, there's a very important issue when you have a timber sale, when you plan a timber sale, is that make sure that you talk to your accountant, your tax preparer, to do what's called estimated tax. If you don't make enough withholding from your paycheck or make estimated tax, you might be subject to a penalty or interest typically they are small, but of course it depending on the sale of the size of the timber sale. But that's a very important issue. If you plan to have timber sale, be sure to talk to your tax people to make sure to comply with estimated tax. Okay, timber expenses. What are some of the timber expenses? Well, here are some examples. Tools of short useful life or small cost. The examples here: hired labor, fees of consulting, forester, accounting fee, property taxes, the cost of prescribed burning, the expenses of fire, insect disease control and protection, road and fire break maintenance costs, overnight travel, and also there's a deduction called depreciation. What is depreciable assets? They are property used in business or income production in your forest land management. For example, logging machines and equipment, and they are 5-year property. Pickup trucks, tractors that you use to manage your property. Temporary road that you build to harvest timber, for example. Computer you use to manage your timber property, farm buildings. However, land cannot be depreciated. Okay. Also, if you are classified as timber business, there is this first year expensing of asset or Section 179 deduction. These are, once again, for timber business owners or for any kind of business owners. Under this Section 179 deduction, you may expense up to $1 million you spend on qualified business property you put into your business in use in 2018, subject to a phase out and business taxable income limitation. A phase out here just means that if you still qualify for this $1 million expense, but your deduction, the amount of deduction is reduced. Typically that's what phase out means. But bonus depreciation is also available if you can claim a first year expensing, and on top of that, you can also claim a bonus depreciation. And this is an additional first year. It's only a first year depreciation deduction, and the amount is 100% of the cost of the property that you bought to put into your business or income producing property. Okay. This is a surprise change from the tax law here. For an investment timber property, the deduction of those expenses was temporarily repealed, and that's from tax year 2018 to 2025. So repealed means the deduction is temporarily eliminated, so they're no longer available for investment timber property. Before the law change, yes, the deduction is available and is subject to a 2% AGI. And AGI means adjusted gross income. But after the law change, starting in 2018, that deduction is no longer available. What you do is you may elect to capitalize the expenditure. Capitalize meaning you're not currently deduct that expenditure, and you just increase the timber basis, carry it on your book, and increase the basis, add it to your timber basis, and you deduct those when you have a timber sale, which could be many years down the road. So that's a surprise change here. Now for timber business expenses, yes, they are still deductible. There's no change here, and you deduct them on Form 1040 Schedule C. And that means that if you materially participating in the business, for example, your participation is more than 500 hours, there are 6 tests based on number of hours you participate in the business. And here the written record is very important to document that. And because the time being, so we don't have enough time to go over the details on that. And for more information, we will point you to the resource in the end. Form T, as we said, it's a specific tax form for timber transactions, and the name is called Forest Activities Schedule. So it's a tax schedule that has 5 parts. First part is acquisition, you purchased it, and or you inherited the property. So that reminds us to set up the basis. That's the best time to set up the basis when you just acquire the property, because you have those data freshly available. And the second part, part 2, is called timber depletion. We've already talked about that. And then when you have a timber sale, that's reportable on part 3, reforestation, the cost, and if you spent any money to manage your timber stand, for example, the fire disease control, those are recorded in part 4. Ownership is if you sold your timber land, then the ownership changes, and that's part 5. Now, let's find out who must file Form T. You complete Form T only if under the 3 conditions. Claim timber depletion deduction if you sold felled timber in the timber business category, and that's called Section 631A sale. Or you sell timber outright in the timber business A Section 631B sales. However, there are good news here. The exception to that 3 condition in terms of filing Form T is occasional timber sellers are not required to file. And the occasional is defined as 1 or 2 sales every 3 or 4 years. But it is prudent to file when you claim a depletion deduction, or if you sell business timber, even if you're not required to file. It's a prudent business practice to file that. Okay. Form 1099-S are a tax form to report real estate transactions. And it is required for timber sales, for both lump sum and pay-as-cut timber sales. So who are required to issue Form 1099? Well, this is a list. The first person in line is the person, including attorney or title company, responsible for closing the transaction. And the language here is a lot of time for closing real estate, closing the transaction. The mortgage lender, the seller's broker, the buyer's broker, or the buyer. So the timber buyer, that would be here. So these are the people who must file 1099. Now, if we don't file 1099, there will be a penalty per form. So it's very important, if you have a timber sale, someone on this list here, make sure that one of the party is responsible for issuing 1099. If you're a landowner here, you're not required to issue this form. Instead, you are the recipient of this form if you sold timber. So this is not your responsibility, but since you have this timber sale and you know this knowledge, you want to make sure that someone files 1099 to you and the Internal Revenue Service so that to avoid any possible penalties here. So as far as where to get the 1099 form, you don't go to the website to download, because the download form is not scannable, and there's a penalty for using a form that's not scannable. And as you can see, the volume could be huge, so they do need you to use a scannable form. You can order the official form, and you can call 1-800 tax form. They'll mail the scannable form. And there are also software that's specifically designed to meet the standard so that it's scannable, but you pay for to use that kind of software. That's fine too. And so a copy of 1099, like I said, is sent to you, the seller, and another is to the Internal Revenue Service. Okay, 2018 is another record year of hurricanes and fires, which have inflicted huge economic losses to timber landowners, as well as homeowners with landscape trees. The good news is that landowners may be able to deduct eligible losses on their tax returns, which is an extremely important part of the relief and recovery effort. And these landowners are in great need of information, particularly because of the tax law change. So USDA Forest Service have published a guideline to help timber owners and homeowners understand the deduction rule for timber and landscape tree damage from a casualty event. So we need to define the casualty. A casualty loss arises from a sudden, unusual, and unexpected causes, such as a hurricane, a fire, and other event. So they are deductible for investment or business property. However, the amount of the deduction is limited to the lesser of the fair market value loss of your timber or the adjusted basis of your timber. So now we can see why it's important to set up your adjusted basis. If your adjusted basis is low or zero, the lesser of the two amount is very little or zero. So the amount of deduction is limited. Now, if return from a salvage harvest, court award, and insurance claim, normally we don't have those, but if those exceed your timber basis, you have a gain that it's taxable, or you can postpone the gain by reinvesting back to the timber. So in this case, that if you're able to very lucky have a salvage harvest and the harvest amount exceed your basis, you actually have a taxable gain. Well, for landscape trees, which means homeowners, in your backyard, you have backyard tree damage, or your own timber property as a personal use property, there's a big tax law change here too, is that the loss is deductible only if that loss is attributable to federal declared disaster starting in 2018. So this is a big tax law change here. And so even if the loss is attributable to federal declared disaster, and for landscape tree loss deduction, the amount is subject to 3 limits. First is a limit of the lesser of the fair market value loss or the basis. And then it is reduced by $100 per casualty and a 10% adjusted gross income reduction. So as you can see, the tax law definitely does not favor personal property or the trees that use for residence, because residence is considered personal property. And so there are this limitation here. Prior to 2018, these owners, personal timber property and also landscape trees, can deduct casualty loss regardless whether or not these losses are due to federal declared disaster. So this is the change here. Okay. However, the tax law does provide some tax relief for homeowners or personal use timber owners affected by the 2016 and 2017 federally declared disasters, including Hurricane Harvey, Irma, and Maria. So for these taxpayers, the $100 reduction will increase to $500, but the 10% reduction is eliminated altogether. So this makes these taxpayers easier to claim the deduction. Reforestation cost. This is a special tax incentive. So under the tax rule for reforestation, you can deduct outright the first $10,000 merit filing joint or $5,000 merit filing separate or single taxpayer per year of qualified expenses per qualified property. So you can deduct $10,000 per year per qualified property. And you can also deduct, or the word called amortize, any additional amount over $10,000 over 84 months. So 84 months divided by 12 months, and that's 7 years, but affecting your 8 taxable years return. So these are the deductions for reforestation. Now, in order to qualify to take this deduction, what you do is for timber investment property, you take the deduction on Form 1040 as an adjustment to income. As you know, the tax form has changed. So for 2018, you're going to report this on Schedule 1. So they have the 6th schedule. And you don't have to take itemized deduction to take this deduction here. For business, you take the deduction on Form 1040 Schedule C, or if you are a farmer, you file Schedule F to take the deduction here. I'm going to summarize to how do you take reforestation deduction is you got to attach a statement to your return, okay, showing unique stand identification number. This just means that you want to show exactly where your property, you cannot miss the reforested property, mix that property with other property, and to take a bigger basis. So they want you to separate that reforestation per qualified property. You show total acres of reforested acres, nature of reforestation treatment, meaning a planting or even a afforestation, meaning the natural regeneration. That all qualifies, although natural regeneration, you may not have very much high cost here, but that does qualify. Total qualified expenditure eligible to be amortized or deducted. You attach a statement to your return documenting this. And if you need to amortize that additional amount over 10,000, you're going to use Form 4562 Part 4 to do the amortization. Okay. All right, there's another quiz here. You own a woodland tract in 2018. You paid a total of $6,000 to reforest the property, and you can deduct the $6,000 in your 2018 tax return. Is this true or false? I hope everyone got this right. All righty. Okay. I think the answer should be you can deduct the $6,000 in your tax return outright, and you don't need to amortize. And yes, it's an outright deduction. If you choose false, probably you think about you know, that $10,000. But if it's less than $10,000, you can just deduct it all. You don't need to worry about the 8-year tax return. So the answer, of course, there's probably a lot of assumptions here, but basically, yes, it's true. You can deduct this. Okay, let's summarize what we have talked about here. Timber ownership types determine how your timber is taxed. Very important here. And for capital gains, you must own your timber in general for more than 1 year to qualify for long-term capital gains. And there's an exception here is that if you inherited the timber, you don't have to own it for more than 1 year to qualify for long-term. If you inherited timber, you are automatically considered as owning it for long-term. So this is a good thing here. And occasional timber sellers are not required to file Form T. And Form 1099 is required for both lump sum and pay-as-cut timber sales now. Set up your timber basis for your deductions, very important, as you can see. The expenses that you manage your property are no longer deductible for investment property, but you capitalize that expense and carry it on your book until you have a timber sale. The expenses are deductible for qualified business classification. And it's important to take reforestation deduction if you have tree planting cost. And remember to attach to your return the statement showing all the details. And the casualty loss deduction, very important, in general is limited to your basis. So basis is a big thing here. Okay, have another final quiz here. Okay, whether timber sale qualify for capital gains. Starting in 2018, due to the new tax law changes, timber sale no longer qualify for capital gains. That provision was eliminated. Is this true or false? This actually is one of the very important questions a lot of people are asking. Alrighty, really the answer is false. The provision is not eliminated. That's not for this provision. So the good news, remember that if you have a timber sale, in most cases, it qualifies for capital gains treatment if you meet the requirement, but for most cases, yes, it still qualifies for capital gains. Alrighty. So for more information, we can only cover this much for an hour, but we have this tax tips for forest landowners for the 2018 tax year, completely updated to file your 2018 tax return. And what you do is you just go on internet and keyword search the title here. You should be able to find that. It's only a 2-pager publication. It has good examples to show you. For example, I didn't have time to cover the reforestation calculation on any amount over the $10,000. So this publication tax tips will show you an example. Also, I manage the National Timber Tax website at www.timbertax.org. It is one of the top online destination for timber tax transactions, have all kinds of information, and a very good resource to use to figure out your timber taxes. Alrighty, I think I'm ready to answer your questions.